Brokers Alliance and the National Insurance Clearinghouse present the Business Insurance Zone, a Bravo video event. Broadcasting in HD 1080p on Vimeo, YouTube, the Insurance Newsnet, Agent Navigator, BrokersAlliance.com, and on Facebook, LinkedIn, Twitter, and the Insurance Forum. And now your host, the whiz of the biz, Steve Savant. Well, welcome everyone to the Business Insurance Zone, the talk show that spotlights insurance in your practice, keeps you up to speed on insurance news and products, features insurance strategies from top advisors. Get in the zone, the Business Insurance Zone. Our email address for the show, thebiz@brokersalliance.com, and you can call us anytime at 1-800-290-7226, extension 147, for any questions or quotes you have on life insurance, DI, LTC, annuities, or even, think about this, group pension plans. I just want to remind everybody that I'm not a tax or legal advisor, so before moving ahead with anything that you hear on our show of any of our planning strategies, don't forget to consult your CPA, attorney, or if you're with a broker-dealer, your compliance officer. Well, today we're going to talk about a subject that is a little off my actual knowledge base. That's why I try to bring in the best people into the show to keep you informed. It's all about your practice. It's about your biz. And what we're trying to do today is talk about long-term care, not linked benefits. A little different today. And I know they're popular, but there are still planning strategies, planning tactics that it really is necessary to have long-term care. And with me today, right from the head of our division of long-term care from Brokers Alliance, Susan Carlson. How you doing, Susan?
Doing well, thank you.
Welcome to the show. And I have to say, if you're watching this show and you say, man, I want to do a quote, you can call Susan direct, 1-800-290-7226, her extension 140, and they'll give you a quote, any information, anything you hear. You'll be able to answer them, I'm sure. And of course, her personal email is susan.carlson@brokersalliance.com. Well, Susan, let's talk about long-term care, because the whole industry, I thought, was shifting over to linked benefits, either on life insurance platforms and or annuity platforms. Mm-hmm. But you are selling, first of all, you did about $1 million last year in LTC. Correct. Your organization is the largest organization that we deal with when it comes to size of your national organization. It's just huge. So when I'm looking at these numbers, people are seeing legitimate reasons for long-term care, and we're going to be talking about this in several shows because we just have to unbundle this. But talk to me a little bit about, why do we even need long-term care? Because in my head, I'm always thinking, well, what about Medicare? Doesn't that do for it? What about my disability contract? Doesn't that pick it up? Mm-hmm. And how can I integrate this? All our listeners, our show is on so many platforms, as you heard in our introduction, and we have about 250,000 that get the invitation to come to this show. So they're wondering, why should I bring long-term care back into my financial planning practice?
Okay. Well, with long-term care planning, it really is becoming America's #1 crisis, and it's going to be coming to the forefront even more as the population ages. And unfortunately, a lot of us don't address it. It's more of a denial. We push it away thinking that there will be something else that will cover us, whether it be our health insurance, Medicare, the government, just because we don't want to deal with it. Well, the fact of the matter is they don't cover it. Mm-hmm. And instead of looking in the rear view mirror, we should be looking at the forefront of, here's something that is going to happen. We're going to need health care for an extended period of time, and how am I going to pay for it?
Well, I remember in the 90s, when we first started hearing about long-term care contracts, I used to call it the long-term care scare.
Okay.
Right? That was like, oh yeah, long-term care scare. It's really not a thing that I want to bring into my practice. It's not part of the way I look at indemnification. But really, now that we see we're living so much longer, we're living in, I call this the Methuselah generation. Okay. Right? I mean, we're living so much longer. And when I visit nursing homes, it's 9-to-1 women. Mm-hmm. The average is somewhere in their 90s. We have a facility here where we're broadcasting right out of Phoenix. Actually, we're broadcasting from Fountain Hills, right outside of Phoenix. And there are nursing homes that I've been in where the average age for a lot of these gals that are survivors are in their upper 80s, early 90s, and it's 9-to-1 women. So we know that they're using facilities.
Correct.
But even though they're using facilities, people still kind of shy away from selling long-term care. It's too hard. It's too difficult a concept. Mm-hmm. I don't know how to integrate it into my practice. I don't know how to market it. I don't know who my prospects are. We're going to talk about all this.
Absolutely.
Well, talk to me a little bit about, when I'm looking at the why, I want to be able to tell my client with really good statistical information this is what's going on out there right now. This is what we think the odds are of you actually experiencing not only a long-term care event, but how much time can I spend at home? How much time will I have to be in a nursing home? All those kind of things. I know those are questions that everybody's wanting you to answer, so go ahead.
You know, we've actually adjusted our approach when it comes to long-term care planning, because you're absolutely right. In the 90s, it was a scare. You know, these are the statistics, this is what's going to happen. But now we're approaching it more of a softer approach, where we all agree we're going to live a long life, because otherwise our retirement income from our retirement planning wouldn't go to age 90. Okay, now this is also the same person that will tell you, I don't need long-term care insurance because I have heart attack, stroke on my family side, you know, saying that they're going to pass away quickly. Well, then why do we have this other scenario? So approaching it where, yes, we're going to live a long life. If you live a long life, you're going to need health care for an extended period of time. How are you going to pay for that? And how are you going to affect your family? How's that going to affect your family? So we're taking it away from the actual individual who needs long-term care, because that's not what long-term care is. What long-term care is how it will affect the family, the spouse, the children. And by having some type of plan, it really protects the family, exactly like life insurance.
By the way, little side note off our subject, but you know, life insurance side of the equation, more and more underwriters are discounting the use of family history, which tells me that even though you said, like you said, Susan, hey, my family has cardio events in my family, cancer events in my family, but all of a sudden we're not looking at it as deeply as we used to on the life side of that equation. So that tells me that it's not impacting the underwriting as greatly. So people who are under the myth of what you just pointed out, hey, you know, this has been my family, I'm never going to see 80, 85. Hey, maybe not. Maybe you are going to see that.
Absolutely. And just when you look at healthcare in general, people aren't smoking as much anymore. What used to put us in a hospital actually kill us. We're lucky if we have an overnight stay at the hospital. You know, so we are advancing. We're going to live through a lot of the conditions that killed our parents. And fortunately, right now I think this is going to change, but currently, long-term care insurance does not take family history into consideration. Now, they ask for it on the application because they're collecting it. But once that comes into play, I think there should be a huge fire sale before that. But right now, we're not looking at family history.
When we talk about the long-term care market, and we have so many carriers to talk about. I mean, because there's some players that we think that are really people that you need to know about. When I think about long-term care from inserting it into my practice, I have to understand, what does it do? Okay. And why Medicare is inadequate. Okay. Because you're going to get these kind of rebuttal questions, these statements from clients. And why have as I said before, I avoided it, I think because I just didn't understand it. Okay. I didn't know how to talk about it. Right. So I don't really know if I know much about medical. I don't know if I know much about DI. And now you're asking me to talk about LTC. So, you know, it kind of falls in that same area.
Well, the way that we're suggesting is actually using a bridging approach. The same way that you talk about life insurance protecting the family, that's what we need to talk about with long-term care. You know, we don't need statistics. You don't need to know what Medicare covers and doesn't cover, because overall, you can be very well off by telling your client, no, Medicare doesn't cover long-term care. You know, if it might cover here and there, and if it does, we're going to consider it a bonus, but no, it doesn't cover it. Medicaid is a welfare program. You know, you're not a candidate for that. So by having a long-term care plan, just like your financial plan and your retirement plan, all you need to come up with are those written steps, and make sure they're written, of how your client's going to pay for long-term care when it happens. And then at that point, you can decide whether or not an insurance policy, if we want to leverage that money, if we want to transfer that risk, that's secondary. But as a financial advisor, it really is our duty to bring this crisis up, talk about how you want to pay for it, because more than likely it's not your client that's calling you, it's going to be their children. And we need to know what to tell the children, what your wishes are. So coming up with a written plan, and then we can talk about the insurance. I think as an industry, we've also complicated the long-term care insurance, focusing on these minute benefits that really don't come into play. We need to look at the big picture. You're buying a bucket of money, just like you are with life insurance. You're paying this amount of premium. It's going to pay this much out a month, and when the bucket's gone, the policy's gone. And really keeping it simple, rather than trying to get into all the ins and outs.
When I saw your teaching film, which is going to be posted on Agent Navigator, one of our outlets, our internet outlets. I noticed you said something when I was watching the tape. You said something about, I shouldn't say tape anymore. It's got to be video, right? Okay. It's all digital now. 1080 DP. But when we were talking about watching, I was watching, and you said it's not a matter of if I need long-term care. You said when, and you merely made a point of that. Is that the stats bear that out?
Well, the statistics show that 70% of us over the age of 65 are going to need long-term care. But your clients are still going to debate whether or not they're going to fall into that statistic. I really don't believe statistics show. So the way that I propose that you put it in front of your clients is that, unless you die quickly, you're going to need health care for an extended period of time. Now, I don't know how long that is.
Now, didn't you break it up? When I was watching your teaching, you broke it up into two formats. 90 days or less, you qualified that as short-term, short-term care.
Right.
But then you said anything beyond that is really, that's what people start looking at as long-term care.
Right, because we all have our short-term health care currently, but that pretty much stops for any kind of condition in which I'm not showing progress. If I'm in a car accident tomorrow and I've just kind of leveled out and I'm going to be unable to get in and out of a bathtub or get dressed, I'm going to need long-term care, and my health insurance is not going to cover all those expenses. So we have our short-term health care, and what long-term care insurance can be seen as is your long-term health care. So it fits where your medical insurance drops off.
So I've noticed that some people have said, well, I have disability, so I don't need long-term care.
Correct.
But that's not really true either.
Well, no, because disability is set up to cover a portion of your income. It has nothing to do with all the additional medical expenses.
Yes.
Right. So this is actually adding to a disability. Now we can cover a portion of your income, and then this policy will cover all the additional expenses. So they do fit hand in hand.
Well, when I think of long-term care, I think of people in geriatric land, people that are the ARP nation, people that are over 65. I don't really conceive or view, right, long-term care for young people. But really, when we come back in the second segment, we're going to talk about, hey, that's just not true. We have a lot of needs for that. Well, listen, coming up in our next segment, we're going to continue our interview with Susan Carlson, our LTC division at Brokers Alliance. You can contact us at thebiz@brokersalliance.com. Call us at 1-800-290-7226, extension 147, or visit us out on our website at www.brokersalliance.com. You're listening to the Business Insurance Zone, the talk show that focuses on insurance in your practice. We'll be right back after the break. Steve Savant here. For years, I've heard that less than 2% of all term life insurance ends in a claim. That's not many, and clients had to die to receive the benefits. That's the old term insurance. Now start selling the new term insurance. The term insurance that covers your client through a chronic illness, a catastrophic event, or a terminal diagnosis, and pays their monthly premium during extended periods